And here to give us their takes on the market outlook and how things are shaping up, we bring in Todd Horwitz, Chief Strategist of Bubba Trading, and T. Watkins, Director of Stock at Simpler Trading.
Now TG, futures are implying a full 50 basis point cut by the U.S. Fed, but that seems really aggressive given Jerome Powell's reluctance. And what's going to happen if the market only gets a 25 basis point cut? Will we start selling off all over again and see the exact same thing we saw last week?
It is going to be challenging to figure out what the market's going to want to do. I mean, a 25 basis point cut is probably going to do something. There's probably going to be a bounce, but we need to figure out if the market's actually going to throw a bit of a hissy fit and didn't really like that it didn't get a full 50 basis point cut. My concern, though, is that if we do get a 50 basis point cut, then it might actually reinforce the panic situation from Powell and the Fed. And so I think that they're probably going to be a little bit more measured and say, hey, I think we got this under control. Okay, we'll cut a little bit, but we don't want to give any panic signals by cutting 50 basis points.
But right now we have green arrows all across the board, and it's like the market is pretty much already pricing in that we are going to get a 50 basis point cut. And so we are up over 1,000 points on the Dow already, simply based on rumor and speculation alone. So TG, we have manufacturing data out now, and in addition to China, we actually have Japan, Germany, France, Italy, and South Korea, all whom reported a contraction in output. So the IMF and the World Bank are now ready to extend emergency financing in order to blunt the impact. So what will something like that look like?
This kind of stuff is actually very concerning for me. When I kind of look at this, I just say that they're just adding steroids to a situation, or anytime that there's a little bump in the road, they're going to be throwing money at it. As Bubba said earlier, it's like, well, this doesn't necessarily affect the little guy on the street or the manufacturing. Like, we need to be better prepared for individuals, for individual companies to handle and weather situations like this. They need to have their own plans in place for disruptions in product supply and their downlines and all that. But when it comes to just throwing money at the economy and just putting money in the market, I think it really misses the point and isn't going to really help us spring back any kind of structure. I mean, we need to take care of what this thing is and how it's affecting the mechanics of our economy, not just the financial side of it.
And now, Bubba, in China, they're also playing the bad news is good news narrative, too. With the awful manufacturing data, traders are now expecting more fiscal spending by the government and more infrastructure spending. How much longer can China sustain this given all the measures it has already put into place, as well as its widening fiscal gap that we're seeing right now?
You mean considering they already own 55% of the Japanese stock market? I mean, you look at Japan started this in 1989 when they made the horrible decision to buy Pebble Beach and well overpaid for it. They've been chasing that since 1989. Here we are 30 years later, and they're still in the same predicament. So they keep buying stock. Listen, if you want to lower your currency to zero, you can continue to pretend that you're monetizing. The central banks and these entire systems are all, again, a big mirage. They don't do anything but destroy the wealth of the average guy. They take everything away from small guys because the small guys still got to go out and pay ridiculous rates. So they can go ahead and do what they want to do. But at the end of the day, they're benefiting nobody but the very top end of the curve. And that's just ridiculous.
So TG, are we getting overly bullish today and extending this rally on this dip buy? The market is up over 3% now, but the data released from both China and the U.S., they showed record lows. So did we really bottom out, or is there still more room to fall further as more negative data gets released subsequently?
One thing that I've been telling my subscribers this whole past week is just because there are moving averages or there's support areas or there's price congestion doesn't mean anything when people hit the eject button and want to get out of the market. When prices go down, they just blow through everything. And I think this week has been a very clear indication and signal of that. And actually people are just watching it maybe for the first time because we've been in such a strong bull market for so long. As far as today, yeah, I do think today is a bounce. I prefer to usually look and actually see if we retest some lows. I wish I had my charts right here, but I'm looking for price to get over the 15-minute 50, eventually the hourly 50, to use those as support lines for moving averages. And I want to see price actually come back down. And if it's going to retest this low that we had from late last week, I got to see it hold in order to go up, and then we'll kind of reassess it from there.
Everything just bounced right off the 200 day. Todd Bubba Horwitz and TG Watkins, thank you both for your insight.
Thank you.
All right, thank you.